Everyone. So welcome to the session, right? So for today, we will be covering on Bitcoin outlook, right? So we're taking a look at it just based on the macroeconomics, taking a look at the current macro landscape, just based on the recent economic data. And of course, we will hop onto our charts at the second half of the session, right? Just to go through the general outlook on Bitcoin currently, we will take a look at technical analysis. At the same time, right, if you guys have any chart requests, it can be on gold, US oil, or any other instruments that you want us to take a look at, please just feel free to put it under the question chat. Okay, and of course, if at any point in time, if I'm going too fast, too slow, or if there's anything that you don't understand, right, please just feel free to put it in the chat box, the webinar chat. Okay, so with that, right, let's begin our session. So I hope that you guys can see my screen, right? You should be able to see the webinar slides. So for today, we will be covering on Bitcoin outlook. Okay, so just a quick disclaimer first, right? Please ensure that while you're trading, right, understand the trading contract for differences, right? We also need to consider your experience, right? Before starting, you need to consider your experience before starting trading. And also note that anyone can suffer losses without proper planning, practice, discipline, and risk management. Risk management is especially important because we don't know what's going to happen in the markets. Right, CFD trading, it's also not a get-rich-quick scheme. It takes time and determination to master the skills needed. Right, and none of the information provided here is a recommendation to trade anything. Right, it's purely for educational purposes only. And any financial decision made is your own risk. Right, please only use official channels to contact Exness and its personnel, and only deposit through the official Exness website or app. Okay, so as we've covered, right, this is the agenda for today. First, we will take a look at the macroeconomics landscape, right? So this would be the first half of the session, as well as the on-chain analysis, right? So this is really just to give us a better understanding of, what's currently the situation in the market, right? And what are the key economic indicators and how do they influence Bitcoin? And then the second part is the on-chain analysis, right? So for this, we will take a look at several indicators that could help us to identify potential market tops and bottoms, or indicators that we can just use to cross-check, right, against other indicators and form a view on Bitcoin. Right, and then the last part is on the price analysis. So for this, what we will do is we will hop onto the charts. We will take a look at it, just highlighting key levels from the higher time frames, right? It can be from the monthly, daily, weekly, down to the 4 hours time frame. So this is the brief agenda that we have for today, right? Of course, along the way, if you guys have any questions, right, it's open for Q&A throughout. So just feel free to put your questions under the questions tab. Okay, so with that, right, let's just begin the session. Okay, so first we will take a look at the macroeconomics, right? So for the macroeconomics, right, first we have the CB Leading Economic Index. So this is one that it's basically a measure of the economic conditions, right? So we can see just from the CB Leading Economic Index, it's currently hovering in the positive territory. Right, so this shows that there is a potential recovery, right? I'm sorry that the axis it's missing here, but this should be negative, right? So the negative territory and above the red line is that positive territory. So we can see that just based on this indicator itself, it shows that the economic condition has potential for recovery, right? But at the same time, right, there are some indications of an economic slowdown, right, as the Fed expected. So these are the few indicators, right, we can take a look at or reference, right? So the first one, it's the leading credit index, right? So this is one that measures basically credit in the private sector, right? So just from the leading credit index, right, shows that private sector has adapted to high borrowing costs. This is especially as interest rates are still considered elevated, right? Still high currently, because if you take a look at the most recent inflation data, right, US inflation, it's still extremely stubborn, right? So we're still seeing persistent price pressures in play, we have Fed Chairman Jerome Powell coming out to say that even though he acknowledges the disinflation progress, right? But at the same time, more work still needs to be done. So just with regards to that, right, we could see interest rates remain high just to curb inflation. So the next one, it's the S&P 500 index. So the S&P 500 index, it's basically a measure of the top or largest 500 companies in the US. So in general, equities are considered risk assets. So what this means is that when market or when investors are optimistic, right, or when there is a lot of enthusiasm in the market, that's when your stocks tend to do well. So they're considered risk assets. So the converse is true when you have a lot of pessimism in the market or when people are slightly more risk adverse. That is when the stock market could take a hit. Right. So in this case, you can see just on the S&P index, right, we have been seeing a positive run ever since the anticipation that, Fed has stopped raising interest rates in late 2023. And following that, we are seeing anticipation building up for Fed cutting interest rates. And as such, right, we are seeing that rally up for the S&P 500 index. Of course, there are also Trump trade policies in play, right? Trump's this tend to be a bit more pro-business, right, in that sense. So that could also support the stock market rally. Right. The other one would be on the manufacturing new orders, right? So for manufacturing new orders, it's basically a measure of the economic condition, right? Just based on the manufacturing industry, right? So this is not significant, but you can see that when we have higher price pressures from the manufacturing sector, it could also translate to higher inflation data, right? So in this case, the manufacturing new orders, it's one that measures the performance in the manufacturing sector. The other one is actually the average weekly work hours in the manufacturing sector, right? So if you have higher average work hours or more manufacturing activities, which was shown in this indicator, right, then it shows that economy, it's at least either it's doing well or it's sustaining that growth. Okay, so these are the economic indicators. The other one, it's on the US core CPI. So this is actually a data that was released yesterday, right? And we saw that volatility in dollar index and also the announcement that Fed Chairman Jerome Powell mentioned, right? So we can see that the core CPI, right? Maybe just a brief understanding of what the core CPI is first. Right, so core CPI basically measures the price changes in terms of the goods and services that consumers buy, right? So because of that, it's a core CPI, so it excludes volatile items like your food, energy, because those are subject to price changes, right? And it can be quite drastic in terms of the price change. So that component is removed from the core CPI calculation. And now, the most important thing for us traders is that why does the core CPI matter, right? Well, how does it matter whether it impacts gold, US oil prices, right? So core CPI itself, it's a measure of inflation, right? And it's also one that Fed monitors closely. So in general, Fed's inflation target is 2%, right? So the annual inflation target is 2%, and we can see that just based on the most recent data released yesterday, we have core CPI standing at 3.3% annual inflation in January. Right, so what this suggests is that it's likely that the room for Fed to cut interest rates would be a lot lesser, right? Because inflation is still far away from the 2% target. And in fact, it picked up as compared to the previous month. Right. So with this in mind, right, and also this hawkish comments by Fed Chair Jerome Powell, right? He mentioned that interest rates are likely to stay restrictive for longer. So because of that, you can see that when there is a pickup in inflation data, right, it also translates to higher interest rates. Now, what this also means is that it could strengthen the dollar, right? A lot of it also depends on whether it's been priced in or not, but it could strengthen the dollar, right? And at the same time, if dollar strengthen, it could also impact the performance of other currencies like euro dollar, pound dollar, right? Because you can see that from the most recent run up, when we saw the dollar index strengthen since the start of this year, and even I think back from November, right? Where that's seeing that downward pressure on euro and pound dollar. Okay, so these are some things to consider, and also the importance of why this macroeconomic indicator, it's gonna impact, the movement of currencies. Right, and conversely, it's true, right? If it's low inflation, then there is more room for the Fed to cut interest rates. And because of that, right, it's also it weighs on the dollar. So you can see that when interest rates are lower, it incentivizes borrowing. Right? So this is also a tool that's used, right, to prop economic growth by increasing or lowering the cost of borrowing, right, and thereby boosting consumption. Okay, so we can see here, right, from if there's low inflation, which is not the case right now, right, but general low inflation, right, if there's more liquidity, it's also bullish for Bitcoin. But this itself is also a double-edged sword, right, because depending on the reason as to why Fed cut rates, if Fed is cutting rates because inflation is coming down, but growth is still holding up, then it's a good sign for the economy, right? But if Fed is cutting rates, like what we saw during COVID session, the COVID period where it's to support growth, then in that case, right, it might actually lead to other problems or like economic recession, right? In such case, then Bitcoin itself, this Bitcoin, it's still sensitive to the movement in the markets, right? Especially risk aversion. So if investors are a little bit more wary of if there's very high risk aversion in the market, right, where people are more careful, then that's when it could also hurt Bitcoin prices. Okay, so this is previously we covered on the US core CPI, and right now it's the US CPI data, right? So the CPI data rose by 3% annually, right, in January. So this includes the excludes the food and energy, includes the food and energy prices, right? So the core CPI, which we covered earlier, exclude the food and energy. The US CPI data, this includes food and energy prices. And the reason why it's important for us, right, it's the same. If we have high inflation data way above the Fed's target, then this would prompt the Fed to just keep interest rates higher. And that could in turn hurt risk assets, right? So for example, stocks, for example, other risk assets like ones that are basically sensitive to market move, to risk sentiment. Okay, so yeah, so that's on the US CPI data. The next one is on the Fed dot plot, right? So you can see here, right, just based on this, we have that like a lower projection in terms of the Fed dot plot. Back in 2024, we're seeing 5.1%, and 2025 is slightly lower at 4.1%, but still elevated interest rates, right? So what this means, it's again, right, if it's higher interest rates, it's more expensive to borrow for consumers, right? So this in turn could then risky assets, right? For example, like in this case, we're covering on Bitcoin, right? And if it's lower rates, it's cheaper, there's more liquidity, Bitcoin could benefit. This is just one driver. Of course, we have seen that, right, the rally caused by Bitcoin, it's also a lot of anticipation around crypto-friendly policies, right, with Trump, right, under Trump administration. So those are things that could also impact Bitcoin, right, just from a fundamental perspective. So these are the macroeconomic indicators. Essentially, it's an idea of how the US economy is doing and where interest rates might be heading. And of course, we need to draw the link between that as well as the impact on Bitcoin. Okay, so those are the macroeconomic indicators that we have, right? The next part we will move on to would be the on-chain data, right? So for on-chain data, right, just before I move on to that, right, can I just have a show of hands, or like you guys can put it in the chat, right? Are you guys familiar with on-chain analysis, or is this something that is completely new? So maybe you can type it in the chat, right? Is this something that you guys are familiar with? And if so, right, what are the indicators that you use in the on-chain data analysis? Okay, so just, yeah, feel free to share that, right? So I'll be sharing a few indicators, but it will be good to know, what are the on-chain analysis that you guys have done? And if not, right, if this is completely new, then this would be the few indicators that I use for on-chain analysis. Okay, and of course, if you guys have any questions on the fundamentals previously, right, where we covered the macroeconomics, please just feel free to put it in the chat as well. Okay, so the next part that we will cover would be the on-chain analysis, right, as we've mentioned earlier. So the first indicator, right, would be the balance on exchanges. So the balance on exchanges, it's basically a measure of how much Bitcoin is being held on the exchanges as compared to private wallets. Right? Now, the reason why this is important is because if the balance on exchanges is low, or if we're seeing that outflow in terms of the balance on exchanges, this could suggest that there is lower selling pressure, right? So just imagine that, when people are trying to buy and sell Bitcoin, they have to transfer them, right, from their wallets onto their exchanges, and then they do the what do you call that, the transactions there, right? So in this case, right, if there are more Bitcoin flowing into exchanges, right, then this is when we see the increase in selling pressure. We could be seeing that bullish momentum in Bitcoin taper off. Okay, but if you have less Bitcoin on exchanges, right, this suggests that there is lower liquidity, right? And at the same time, it could also bring about much higher volatility. So what this means is that we could be seeing much bigger spikes, right? So every small movement, buy and sell, could move Bitcoin by a bigger, the prices of Bitcoin by a larger extent. So the current one that we have, you can see that the balance on exchanges, it has been declining ever since November, actually even earlier, right, July. So we are seeing that drop, right? This could indicate that there is lesser selling pressure, and it also aligns with that run up that we saw in Bitcoin, right? So that whole Bitcoin rally. So when we have that drop, it also suggests that there is lower liquidity. So there is much more movement in Bitcoin, right? And then we have the exchange balances, right? So if exchange balances are low, it means that Bitcoin is being moved to private wallets, there are less selling pressure. Okay. So the other thing that we can also track, it's the net transfer volume to exchanges, right? So if you take a look at this indicator, right? So this indicator is from Glassnode, right? As with the previous one, you can see that in the last 3 months, the exchange outflows dominated the coin flow. So what this means is that we are seeing that withdrawal from exchanges. So like what we covered earlier, right? If you are seeing withdrawals from exchanges, it could mean that there is a shift to private wallets. It also means that there is less selling pressure, right? You can see that the flows hit parity last week. So parity is 0. Right? So basically like the net flows, right? So inflow and outflow is relatively the same. So they offset each other, right? So this indicates that there's no major accumulation of selling and buying. Okay, so this is what it means when we talk about Bitcoin or net transfer volume hitting 0. So this also suggests that in the past 3 months, right, we're not really seeing that much movement, right? Given that the outflow and inflows are aggregated to be almost 0. So in this case, right, this could also explain that whole consolidation that we're currently seeing in Bitcoin prices. A big part of it was driven by the enthusiasm, right? First started with the launch of the Bitcoin ETF. We saw a lot of ETF inflows coming in as well, right? So institutional demand coming in to push prices higher. But following that, right, especially after Trump took office, a lot of the news or positive developments around Bitcoin might have been priced in. So this is why we're also seeing that consolidation. Not forgetting that Bitcoin is also a risk asset, right? So as what we've mentioned, it's very sensitive to market sentiment. So now with all the uncertainty that's surrounding the Trump trade policies and also the tariffs that are coming up, right? There's a lot of unknowns. So because of that, right, it could also weigh on the Bitcoin rally. So the next one would be the mean hash rate. And so the mean hash rate, it's a network integrity, right? Basically, this measures network integrity, right? So if you have a high hash rate, as we saw here, right? We saw the hash rate has been increasing. So you take a look at the orange line, you can see the hash rate has been climbing. This just means that you have more miners that are investing, right? So the network security is high. It's a good outcome, I would say, or a good sign for the cryptocurrency. Right? A falling hash rate, right? So this means that miners are participating less, they're shutting down, right? You have a weak network. So this could be seen as a bearish case for the network and also the currency, the cryptocurrency. Right? So we can see here, right? Hash rates, this orange line, the most recent one, it remains near an all-time high. So this shows that there's miner confidence in Bitcoin's future. Right, so essentially, when we take a look at a network, we want to see one with high hash rates, right? Because it means that there's higher computing power to secure the network. If there is one with low hash rates, then this might not be great for the network. So for Bitcoin itself, you can see that it's currently hovering near all-time highs, and we're seeing that steady increase in terms of the hash rate. The next one would be on the pi cycle top, right? So the PCT indicator. So the PCT indicator basically measures that historical pattern, right? It predicts the Bitcoin cycle tops. So you can see from this diagram, right? The purple line that we have at the top, the upper bound, you can see that price hardly goes into this level. The one time that it did push into this level from the diagram is March 2024. You can see following that, right, Bitcoin actually paired recent gains. We're seeing that decline before price pushes higher. Right, so you can see that if the Bitcoin crosses the pi cycle top, which is that purple line here, right, it's currently still slightly far away from this line, right? So this signals a local top and there's a risk of a retracement. So in this example, or rather from this indicator itself, we can see that this model suggests that the Bitcoin has not topped yet, right? There's still some more room to grow, given that it is still slightly far from that pi cycle top, this purple line that we have here, right? But we are approaching the high level. So if this is the range, you can see that it's residing slightly above the mid of this range, right? So the high level is about 145K. So the upper target of 145K, right? This could be overshot slightly. There is a risk of a retracement. It doesn't mean that the market will peak at that level, right? This is just a possible estimation. But a lot of it also, you need to combine it with, for example, technical analysis or even fundamental drivers. Okay, the next one would be the Mayer multiple, right? So the Mayer multiple has a different target, right? So this target is much higher. So the Mayer multiples target, right, based on the Glassnode indicator that we have, right, this here suggests that the Bitcoin price, right, so how this indicator works, basically, it's that it measures Bitcoin's price to the 200-day moving average. Now, the reason why this matters again, or how we can use this data, is that if price, or if this Mayer multiple, target, goes above 2.4, then it suggests that it could be overheated, right? So there's a risk of that retracement or correction. And then if it's below 1, right, suggests that it's below the 200-day moving average, right? So it's below 1, it's undervalued, right? So just based on this indicator alone, it suggests that there is potential for upper limit of 202K, right? So this also means that there is more upside is possible. Now, the next one that we have is the Colin Bitcoin Bull Run Index, right? So this index, also known as the CBBI index, this measures how close Bitcoin is to the market top. Right? It's important because if you take a look at the cycle of Bitcoin, right, every single time we have that big retracement. So let me just mark it out here so that it's easier to see. You can see that every time we have that big retracement to the downside here, and then again, right, that retracement to the downside for Bitcoin prices, right? This often coincides with the CBBI hitting or going above the 80 threshold, right? And in some cases, even above that 90 threshold, right? So it's at extreme level. So 80 might be a level for caution. Maybe 90 is the one where you can see that retracement, right? So you can see that every single time price actually goes above or within that 80 to 90 region, right? This is potential for caution. And also, right, market might be slightly overheated. It could be due for a correction or that retracement that we saw, right? So currently, where we are right now, right, it's a relief to know that price, it's still hovering between that 70, 80 region, right? Not so much of the 80, 90, right? In fact, it paired slightly, right? That did. So if it's 80 is above 80, it's to tread with caution. You can see that the top might potentially, the market might be topping, right? And below 40 just shows that it could be undervalued. There is potential to buy. Now, where we are currently, the CBBI, it's at 77. So this area here. So this means that we are approaching a local peak, but it's not necessarily the cycle peak. Now, what this also means is that we could see that retracement maybe slightly before price continues higher, right? So this part, we need to take a look at the technical analysis portion, just to ensure that if there is any uptrend or downtrend, right, it's still sustained. But if we're seeing something like that and a clear shift in market structure that pushes in after, then this could suggest, right, along with that CBBI indicator, it could suggest that price could be near the top. We could be due for that retracement. Okay, so this is on the CBBI indicator. I hope that so far it's useful in terms of the different indicators that you can take a look at, right? So for this source, you can take a look at CBBI here. Okay, so the next one that we want to see would be on the ETF inflows, right? So we've covered a lot on chain analysis. We've covered on the different indicators that we can use to potentially predict the top and bottom of cycles. At the same time, we also want to take a look at institutional demand, right? So institutional demand, right, one way to measure it, it's just based on the ETF inflows. The idea is that if there are more money that's coming in, right, through the ETFs, then this could highlight increasing demand for Bitcoin and in turn support higher prices. But on the flip side, if you're seeing that, investors are actually withdrawing from the ETFs, right, they're realizing their profits, then it could contribute to selling pressure on Bitcoin, right, that could weigh on Bitcoin prices. So with the most recent data, we can see that in general, right, and if you take a look at it across 1 year, for example, we're seeing inflows in Bitcoin, but just the past 2 weeks, right, we are seeing that outflow in terms of Bitcoin across the different ETFs, right? You can see it from this one, right? So this it's basically the names of the different ETFs, right? This is the BlackRock ETF, right? And we have all the others. The BlackRock fund, right? So on and so forth. So you can see from here alone, right? We have a net withdrawal of 462 million USD, right? So over 460 million USD. So 462.9 to be precise, right? Of ETF withdrawals here. So what this also means is that the average withdrawals that we're seeing, right, could be about close to 90 or 100 million USD. I'm guessing this is per day, right? So this is the average withdrawal. So what this also suggests is that we can see why Bitcoin has been consolidating. If you take a look at the price action, right, Bitcoin has been consolidating around that range and probably waiting for another breakout before that further push if we do have one, right? If not, you can see that this is also partly driven by the ETF outflows that we're seeing. Okay, so on top of that, right, it could also be caused by other factors like this uncertainty, as we've mentioned, right? So Bitcoin itself, it's sensitive to market sentiment, sensitive to risk. So when markets are in extreme risk aversion case, we could see that that would also, ease any kind of bullish momentum on Bitcoin. Okay, so I hope that so far it's clear, right, in terms of the indicators that we're using, in terms of the using ETF inflows to gauge institutional demand. And if you guys have any questions, right, just please feel free to put it under the chat box. If not, right, we will hop on to the price charts to take a look at Bitcoin. Right, so we take a look at Bitcoin using technical analysis. And if you guys have other instruments that you want us to see, just go through, please feel free to put it under the question chat. Okay, so let me just share that briefly. Hope that you can see my screen, right? So this should be showing the Exness web terminal. Okay, can you guys see my screen? So you should see the Exness web terminal. Let me just erase that. Right, so this is the Exness web terminal. Let me just erase all these markings. Okay. There we go. Okay, so I hope that this is all right. Okay, so let's take a look at Bitcoin just from a technical perspective. Let's highlight potential levels that we could see from here, right? And also key trends. So here you can see on Bitcoin, right? If I'm on the monthly time frame, there isn't much. We're seeing that consolidation over here. And just based on the monthly, if you're to zoom into the highs and lows of the candle, you can see that price is still hovering above this fair value gap and also this demand area, right? You can see that just based on the monthly prices are still in that bullish structure. It did form higher lows and higher highs. We saw that this candle closed above the last high, right? And it's currently pulling back to test this demand zone. So on the monthly, right, we could be seeing that consolidation, but the uptrend is still intact. Okay, and if we move down to the weekly time frame, on the weekly, we're seeing that consolidation even more clearly, right? So on the weekly, this is what we have currently. You can see that just based on the last move, right, price actually tapped into this region, this area over here. You can see this move, right? And we're seeing this potential double top potential, but not double top because price did not actually break below the neckline, right? So for any double top to be formed, we need a clear break and retest of that neckline, which did not happen. So if you can see that price just failed to form a higher high, it is just consolidating around that area, but it's not a reversal pattern. Okay, not yet, right? Potentially, if we do have that but double top, we need a break below that support level or this neckline. If you put this level in close or in a line chart, you can see this clearly as well. This is just that consolidation. We're not seeing that break of neckline yet, right? If there is any. So over here, right, we are still sitting on this potential demand here. Right, one other thing we can do is to take just from this move, right? So we have a potential demand. I would also like to use a Fibonacci retracement on this move just to identify if there is any retracement or pullback. So if you take a look at the retracement level, right, this whole move, we can identify this move and that retracement. So from here, right, this move that we have, we can take a look, take the swing points, right, from low to high. And then you can see that the retracement levels that prices are testing would be the 38.2%. In fact, it's very close to the 38.2% Fibonacci retracement, right? Slightly shy of this, 38.2 is at about the 87,600 level, this area here. Okay, so that's on the weekly. There isn't much on the weekly, right? If you move down to the daily time frame, you can see on the daily, we're really seeing that very narrow area or period of consolidation, right? So this region, you can see what happened, right? Price consolidated, we saw a test of this high. It pushed back into that 108,000 level, this high here, swept it slightly, right, before it continues lower. So just based on the most recent price movement, right, prices are still forming that lower lows and lower highs, which is why we're seeing that period of consolidation. And here as well, right? So for me right now, right, prices are sitting on a higher time frames demand. And if I were to narrow that demand down, you can see that this area, this doji, before we saw a spike up and a retest of it again, right? This area here could serve as a potential demand. But if on your lower time frame, you're still seeing that lower lows and lower highs, the downtrend persists, right? Then this low could be a potential target. Right, so if price breaks and close below this, then it could form a potential reversal pattern on the higher time frame. Right, so here, at least on the daily, right, this is currently what we have on the daily. Right, now what I want to do is to zoom into this portion of the chart, because this is the part where we're seeing that bearish structure, right? Lower lows and lower highs. I want to see if this bearish momentum is sustained, right? And if it does, then price could push lower to target the low that we have here, right? The reason why is because we saw that price actually tested and swept above the high, but it did not close above this, right? So if that happens, then this low could be a potential target, right? Given that we see that bearish momentum sustained within this leg here. If we don't see that, then price could just consolidate within this region, right, before its next move. So if you move down to the 4 hours time frame, so on the 4 hours time frame, let me just hide this. So you can see that on the 4 hours, right, there are no signs of reversal. How so? Prices are still in the bearish market structure. Again, how do we tell that it's bearish? We take a look at the lows and highs, right? So if prices are still forming lower lows and lower highs, you can see the bearish market structure still persists, right? There's some kind of consolidation, but if there is any kind of reversal, I want to wait for this. But you can see at the moment, we don't really have that, right? Not on the 4 hours at least, but still seeing lower lows and lower highs being formed, just highlighting the last swing point. So price could continue to push lower, and if it does into this demand zone, right? And it continues forming the lower swings, it could even target this low here, right? To sweep this area. So just this move alone, you can see that this whole push down, right? We're still looking at that bearish market structure. Okay, so that's on the 4 hours time frame. Now, if you move down to the 1 hour time frame, again, there isn't much, right? On the 1 hour, it's relatively choppy, right? You can see that price form a low here, but it swept slightly below this equal lows. This, right? So this is a potential demand on the 1 hour, but this is also bearing in mind that on the 4 hours time frame, it's still bearish. You can see here, right? So what this also means is that if on the 1 hour, this demand doesn't hold, right? If price does not hold above this demand, it continues to trend lower, then on the 1 hour, right, we're still also bearish. Okay, like price, it still has the potential to move lower. But if it holds above this demand zone on the 1 hour time frame, then the next high that price could push into would be this high, right? So it's a range here. And if it continues and pushes higher, the next high would be this region. So that's on the 1 hour, right? Bearing in mind the 4 hours time frame, right? If we're seeing any shift in structure or potential to move higher, we want to see a break and close and clear higher swings being formed. So something like that. If not, right, you can see that on the 4 hours time frame, it's still in that bearish trend because of the lower lows and lower highs. Okay, so that's on Bitcoin, just in terms of how we can combine the different time frames. Right, the next one that I would like to cover would be on dollar index. Right, so let's take a look at dollar index. But just before that, do you guys have any questions? Or do you guys have any instruments that you want me to take a look at? Because if you guys have other instruments, right, please just type them in the chat box and we can take a look at them together. Okay, if not, I will take a look at dollar index since there's a lot of news or a lot of movement, right, after the CPI data. So let's take a look at that. Okay, we have requests for gold as well, right? So we will take a look at that. Okay. So let's take a look at dollar index first, and then we will cover on gold, right? So gold is also very much impacted by the dollars index performance, right? So if you take a look at dollar index on the higher time frame first, so you can see here, right, price, oops. So on the monthly time frame, but to zoom in, you can see that price broke out of the last high. We're seeing that consolidation and a retracement, right? But at least on the monthly, we have broken out of this range, right? So we could see potential for a pullback to test this zone, maybe on the monthly. If you're on the weekly time frame, so on the weekly time frame, what we have is that we have price reacting to this area. There was also a previous doji. You can see that consolidation here, this area of consolidation before a strong break to the downside, right? And what happens after is that this doji, so if you guys remember in earlier sessions, I talk about how dojis are range, right? So if you talk about breakout trading where prices are trading within a specific range before it breaks below or above that range, then this is an example of how price consolidated, right? With no clear direction. So basically the open and close prices are relatively similar. And then what happens after is a very strong break to the downside. You can see here, it also created a fair value gap. And more importantly, right, you can see that this is a breakout of the range. So if I were to extend this to the right, we can see that price actually pushed back into this zone and retest this range that we have here. So this gray zone, right? And we're seeing that pullback. So that's on the weekly time frame. If we move down to the daily, right, the daily is very interesting because if we take a look at this most recent price movement, we can see that prices are still holding within that ascending channel, right? So for an ascending channel to be valid, we need price to tap the lower bound of the channel twice, which it did, and it's still currently testing this level, as well as the upper bound, so this level here. Okay, so what happens here is that price, it's pushing into this zone. We're seeing that consolidation around this area. It's really between, for me, the 107.50 and 108.50 area. So if price continues to hover around this area, right, we could still see this before a clear market structure or breakout to the upside. Or potentially, if this fails, right, then it could prompt a steeper decline towards the next support, which is at the 106.20 level. So the 106.20 level, it's aligned with that area of consolidation that we saw back in November, right? We saw that area price consolidate, swept slightly below the low, and then pushed up much higher. So here, right, dollar index, at least on the daily time frame, is still testing the 107.50 support level. I think that if price continues to hold above this level, we could see that consolidation. If it rebounds above this and closes above the 108.50 resistance, then there could be potential for more upside towards this high, right? The most recent high, also that near the ascending channel's upper bound. So this level would be the 61.8 Fibonacci extension. Okay, just for the benefit of those who are not familiar with Fibonacci extension, basically how you can do it is that you just identify a zigzag pattern. That's the first step. The second step is to use the trend-based Fibonacci extension and just apply them to the turning points of the zigzag pattern. So specifically for this, right, the turning points of the zigzag pattern would be this point, and this point. Okay, so what this also means is that it's just a projection tool, essentially, right? So if price it pushes into this level, right, is there any Fibonacci extension that lines up with this zone? So on the daily time frame, we have price testing that support level, but at the same time, it's also facing some kind of resistance from the 108.50 level. If you move back to the 4 hours time frame, move down to the 4 hours time frame, again, right, what we observe here on the 4 hours, there is no signs of a rebound yet. Right, you're still seeing that price form lower lows and lower highs. So again, if I want to see that rebound, the most immediate rebound is to wait for a break and close above this high here, right, which is the 108.50 level, which is why I identified 108.50 as the resistance. The reason for that is because of how price reacted. We saw it once here, we saw a sweep of the recent high here. Right, so if we do see price forming this, I want to see a close break above this, a retest of it again as a support before the potential to move higher. So for me right now on dollar index, right, even though it's holding within that ascending channel, but we're not seeing any kind of bullish momentum on the 4 hours as of yet, right? So it's still not within this. So I do think that price could consolidate within this zone. And if we do see a break above the 108.50, then this could indicate potential for more upside. But before that, right, if the price continues to hover within this range, we could see a break below this as well. So a big part of it is really dependent on the breakup out of this 107.50 to 108.50 range. So this area here. Okay, so that's my view on dollar index. The next one would be on gold. We have requests for gold, Nasdaq, pound dollar. So we'll take a look at those, right? And yeah, so if you guys have any other requests, just feel free to put them in the chat box. Okay, so the next one that we want to take a look at is gold. So you can see that gold is on a really interesting level right now. And just because of how price has been reacting, right? So let me just cover on gold. So on the weekly first. So on the weekly, you can see that gold has been on, let me just delete all this, right? So on the weekly time frame, what we have here, we have this ascending channel that prices are currently testing. And if you have to zoom in, you can see that this ascending channel, so price actually tested, as I've mentioned, right? We need the top and bottom of the channel to be tested to be considered a valid channel. So price did test the top and bottom of the ascending channel twice, once here, and then again over here. Right now, what's interesting to note with gold is that price has rallied to the top of this ascending channel. Right? So like remember how we see dollar index testing the bottom of the ascending channel, we're seeing that price, pushing to the top of this ascending channel. And aligned with that, we also have a 78.6% Fibonacci extension. So 78.6% Fibonacci extension, how is this taken, right? This is taken again. First step, we identify the zigzag pattern. So this is the zigzag pattern. Once we have identified that, we take the turning point. So I have point 1 over here, point 2 over here, and point 3 over here. Right? So I use the trend-based Fibonacci extension. I put point 1, point 2, point 3. And that's how the 78.6% Fibonacci extension comes about. Okay, so this is the one, right? Of course, I've taken it with the magnetic mode. So this one, right? So turn on the magnetic mode, and essentially what it does is that it can capture the highest and lowest point more accurately. So this is the 78.6% extension taken with that zigzag pattern that I've drawn in pink here. Right, so you can see that price is currently testing that. In fact, if I were to zoom lower, so we have a 78.6% Fibonacci extension at a 2,950 level, which is also near the 3,000 psychological resistance. And then beyond that, right, the 3,050 level, this would be aligned with the 100% Fibonacci extension. Now you might think, right, what does the 100% Fibonacci extension mean? Right, the 100% Fibonacci extension basically just means that the extent of the rally that we have from here to here, it's the same, right, as the extent of the rally that we have from 10 November when we projected. So this rally that was observed back in June all the way to October, the first leg of the rally, if you have to project it from the low in November, right, the rally would be the same, and that would be the 100% extension. Okay, so that's what it means. Okay, so now that we have identified the potential key resistance levels, 2,950 level, 3,050, right, we want to move down to the daily time frame. Now, on the daily, right, it's worth noting that even though prices are approaching or has tested the upper bound or the 78.6 extension over here, right, we're not seeing any kind of shift in terms of the bullish momentum. Now, the reason why I say that is because I want to track the most recent price movement. And if you see the most recent price movement, right, be it in line chart or candlestick chart, you're still seeing higher lows and higher highs being formed. Right, so as I've mentioned in all the other sessions as well, we want to wait for a clear shift in market structure, right, for price to indicate that it has the potential to move lower. If not, right, if we're taking any shots just in an uptrend, the resistance levels are weak, so we could be caught in it, right? Just based on liquidity sweeps, price could just sweep slightly above it before it dropped, or it could just be a constant target because we're in an uptrend. So if you take a look at gold on the daily, or if you take a look at gold just in candlesticks, you can see that prices are still forming higher lows and higher highs, right? This area here. So on the daily, this is the demand region, right? You can see that this was the last push that price did before it formed a new high, and prices are currently sitting above this demand zone, which is the 2,880 level, this area here. Now, if we were to move down to the 4 hours time frame, it's even clearer because what happened is that price, you can see that there was the area of consolidation. It was a resistance level twice, price broke above it, retested again as a support, right, before it moves higher. So for me on gold, at least on the 4 hours time frame, daily time frame, there's still no indication that price has broken any kind of structure, right? You can see that there could be, if we have a break below this demand zone and also the formation of lower swings, then I think that price could push lower. But before that, right, you can see that we're seeing a slowdown in terms of the momentum, right? That whole rally, of course, there is a slowdown. We saw that price actually retrace slightly from recent highs. But at the same time, right, just the most recent price action alone, price has not actually retreated, right? So it's still forming the higher lows and higher highs, especially when you zoom into this level. If you move down to the 1 hour or even the 15 minutes, you can see that very clearly, right? So still forming that bullish structure, higher lows and higher highs. So at least on the 15 minutes as well, you can see that if the bullish structure continues, right, the highs themselves are not good resistance to sell into. We want to wait for a clear break in structure first, right? So on the 15 minutes, 4 hours, daily, we're still seeing that bullish structure persist. And of course, on the daily, we have highlighted the demand zone here, right? So if price breaks and close below this 2,880 level and starts forming lower swings, then it has potential to retrace deeper into this resistance turn support level. So this zone over here. Okay, so this zone, you can see that this was an area of consolidation again, as both a resistance and a price broke above it, retested again as a support before it continues higher. So 2,780 to 2,800 region, the support zone, right? If the 2,880 support fails, then there is potential for deeper retracement. But again, any further downside, I really would want to like to see that whole bearish market structure play out first. Right, so that's on gold. The next one that we want to take a look at would be on Nasdaq and then also on pound dollar. Right, so let's take a look at those. Okay, so on Nasdaq. So on the daily time frame first, you can see that even on the higher time frames, if I were to move to the weekly time frame, we're just seeing that area of consolidation, right? But the bullish trend here, it's still intact. So if I were to zoom in, you can see that price actually broke. Oops, sorry for that. Right, so if I were to zoom in here, you can see what happened. We have higher lows and higher highs, and then we had a pullback into this last retracement. So price did retrace slightly, broke above it, and it's currently testing this zone again. Right, but this is a bullish momentum. You can see that it's really just ranging sideways, currently hovering above this demand. We also have this ascending channel that prices are testing, this zone over here. You can see this ascending channel. Okay, so this is slightly more zoomed in. Right? So this ascending channel that we have, you can see here. Right, so prices are currently testing this region. If I were to extend this, you can see this clearly. We have that ascending channel. So prices are consolidating within that demand zone. It's also within that ascending channel. And if you were to stretch this to the left, you can see this as well. It was a resistance that price failed and is currently hovering around this zone. So on the weekly time frame, right, if I were to do the same extension and to project this zigzag pattern, again, taking the turning points. Right, so if you take the turning points, project the Fibonacci extension, you can see that this area, the 127.2 level, is slightly higher. Right, so let me just be exact with the projection. So you can see the 127.2%, right? It's where prices are currently testing. This is the 22,000 level. Right, so the 127.2% taken from the zigzag pattern that I've just drawn. You can see that this is at about the 22,000 level. Right, so this is also the area where we saw that period of consolidation and price just retreating below the recent highs over here, right? So this is really a range that price has been testing for a while at this region, 22,000 level, right? Which is also the 78.6 Fibonacci extension. Now, this pattern itself, it's very interesting because if you take a look at what we have here, you can see that prices have been in a bearish structure, that lower lows and lower highs, right? And then that shift in market structure comes when price starts breaking above the last high. Right, so the idea is that if the downtrend persists, right, price should not be breaking above that last high. But what we're seeing here is a break and close above the last high, and then a pullback again to test this level as a demand. Right, so if you take a look at it on the daily, you can see this here. Price actually pushed back into this, the most extreme region. It broke above it, retested again. Right now we're seeing that hovering around this 22,000 resistance, this region here. So for me, right, it's currently within a consolidation range. We also have this high, the most immediate high, which prices are approaching about the 22,000 level, right? So that's one. So if price breaks above this, and if it breaks above this last high that we had, 22,000 level, then there could be potential for a further rise, right? The next resistance level that we could see price push towards, it's this level here, about 23,000 level. You can see that this level would align with this, I would say that slightly near the ascending channel's upper bound, but not too much, right? I will be a bit more conservative with this estimation. We also want to check if there are any kind of Fibonacci extension that we could project from here. Just based on this, you can see that the neatest zigzag pattern that we have is this one, the most recent one, right? The reason why we don't want to use this one, so this pattern, it's also valid, but I'm a bit more hesitant because this pullback that we have, you can see that if I were to draw a trend line across this, right, price has been just fluctuating around it. So I prefer to use a neater zigzag pattern, which is this, right? So this is the zigzag pattern that we have. And if you were to project the Fibonacci extension from here, you can see that the 127 is slightly higher. But we have a swing high here, right? So I'll be more cautious with the swing high. And if beyond that, right, we have the 161.8 Fibonacci extension, you can see this is about the 23,000 level. So if USDAX continues to climb and it closes above the 22,000 resistance, right, the next level price could potentially rise to will be the 23,000, right? But on the flip side, if we do see this demand level fail, right, this low, which is also aligned with the ascending channel, if price fail this demand, then we could see a deeper or much deeper retracement, because if it fails this, you can see that this could also mean that bearish market structure coming in play, right? Because this is the last low that we have. So if price continues to break below this and it continues on, right, we could see that bearish market structure. The next potential support would be this area because of how price overlap with this zone as a resistance again, and then as a support. Right, so this would be about the 20,000 support level, this region over here, the psychological support. Okay, so if we do see a break and close below this 21,000 support level, this area here, right, then price could push lower into this demand zone and this overlap where price tested as a resistance and support. Okay, I hope that that's clear so far, right? The last one that we want to take a look at would be on pound dollar. So let's take a look at that. And so on pound dollar, if you take a look at it on the higher time frames first, on the weekly, you can see that on the weekly, this is what we have currently. We have price that it's holding. It actually swept the last low. You can see that it moved slightly below or broke the last low that we had over here. And it's holding below both EMAs on the weekly time frame, right? So the weekly just means that each candle, it represents a week. If you move down to the daily, you can see on the daily that we're still holding within that ascending channel, right? Price did pair recent gains. We're seeing this, but it's more of a fluctuation rather than this higher lows and higher highs. The reason why I say that is because if you take a look at the last high we had, which is somewhere here, you can see that price just swept slightly above it, but it didn't close above this region. Now, if we move down to the 4 hours time frame, you can see on the 4 hours, right, on pound dollar, what we had was we have this area here. The price bounced off from the ascending channel, right? Currently, it's hovering around the 1.2460 support. You can see this level over here. And we have the high, which was tested also back in January, the start of this year, 1.2550 level. So for me, I think that pound dollar has the potential to consolidate within this zone, right? Because of how prices are, it is within that ascending channel, but on the higher time frame, if you're on the weekly, you can see that it's still forming that lower lows and lower highs, right? So if price does consolidate within this channel, and if it breaks below the 1.2460, then we could see potential for a deeper retracement and a test of this low at about the 1.2320 level, right? This level, if you take a look at what we have on the left, it was a previous high that price failed multiple times. We also saw that gap up, the gap down, sorry, and then that fair value gap being formed, right, move to the upside, which price then subsequently pushed back to test this zone. So for me, right, the 1.2460 would serve as the first support, and if price breaks beyond that, then the next level would be the 1.2320 level. If price goes above the 1.2550 range, this level over here, right, you can see that the next potential target would be the ascending channel's upper bound, which is also that resistance level that we have over here. You can see this level tested as both a support and resistance, right? If I had to narrow it, stretch to the left, you can see this has actually been tested multiple times as a support here, right? So if price breaks above this, then I think that has the potential to move higher to test this level. Okay, so this level, if I were to take a look at the round numbers, this is about the 1.2620 level, this region, right? More of a zone, right, that we have. So these are the key levels for me on pound dollar. Right? So I hope that this session has been helpful just in terms of breaking down the technical analysis, right, for these different currency pairs, and also just walking through the different time frames. And at the same time, right, give you a better understanding of how you can do on-chain analysis on cryptocurrencies, and also understanding the fundamental drivers, right, in terms of the potential indicators you can look at to measure the current macroeconomic landscape. Okay, so if you guys have no other questions, right, that's what we have for today's session. Right, at the end of the session, please help us to fill in a feedback survey form. So this is just a quick survey, less than 1 minute, right, just 5 questions. So give us an indication of, what you like or dislike about the session, what can be improved so that we can better tailor it to your session, and also understand what other topics can we provide that's of value. Okay, so with that, right, we've come to the end of the session, right? Thanks everyone for your time. We will catch you guys again in the upcoming sessions.